All right, I think it's time for the Fusion Smackdown because I'm going to disagree with you there, Lucas. Well, hello, ladies and gentlemen. Today is August 18th, and this is episode 11 of one of the greatest podcasts in the world of clean energy, sustainability, and ESG. I'm Eric Planey.
Hi, I'm Lucas Fenko.
And today, our final season 1 guest pirate is our good friend, ladies and gentlemen.
Hi, I'm Robert Parker.
Hello, Robert Parker. And the three of us are the Pirates of Clean Tech.
Arg! Arg! Arg!
I don't know why I shook my head to the side. Pirates don't do that. We have real trouble with when it comes to recording the ARG. We just don't seem to really hit it well. But people still want to do it, so we still do it.
Well, you're pirates. It's expected. You know, along with, I want my memorial eye patch from this episode. You know, I mean, Lucas has his. I heard on an earlier episode that you were giving them out to guests. So I'm looking forward to that.
Yes, we're going to order them. We're going to order them any day now.
I have it right here for you. So this is your patch, and I will disinfect it and send it over.
Thank you.
Yeah, unfortunately, the same material for eye patches make N95 masks. So we're going to be on back order for a little while.
Okay, that's a good reason.
As I mentioned before, Lucas and I are wrapping up season 1 of Pirates of Clean Tech. It's been an incredible ride. It's been something that both of us feel very positive about, especially in the wake of, you know, what a changed world we've had over the last couple months. And this is just our little way of giving back to everyone by having conversations over the podcast and YouTube universe about all things related to the future of this world in terms of energy, clean tech, sustainability, and ESG. And I don't think Lucas and I both agreed that for this last episode, there was only one person the whole time we're going to have help us wrap up season 1, and that's our good friend Rob Parker. I got to know both Lucas and Rob at the same time in 2015, going through the energy finance program at NYU, and we've talked about it in the past. It was a fantastic program, and it was really because of these two gentlemen. And the program is headed up by Rob Parker. He's a gentleman who is known throughout the Northeast U.S. and the clean tech community. He is a steward and a champion not only of the industry, but of drawing people in and giving people that capability to take their dreams of entering into clean tech and sustainability and making it happen through various channels that he helps operate and collaborate with. So Rob wears many hats. We're very proud of him for that. And so we want to turn it over to Rob and just get a little bit of his background and tell us what he's working on right now. And from there, we're going to take into a great last episode for season 1.
Thanks, Eric. Thanks, Lucas. I've enjoyed watching the Pirates voyage all season long. And it's been a great ride knowing you. And I think, as Eric said, I've worked in clean tech for more than 15 years at this point with a lot of different hats. And came into that after a career in nonprofits and getting my MBA, and came back to New York and worked on some disaster relief related charities after 9/11, and then kind of wanted to shift gears into doing well and still do good, as it were, and joined a boutique investment bank focused on clean tech. Right now, I work with one of your earlier pirates, Cassandra John at SIF Capital, as managing director there, where we advise clean technology companies on strategy and navigating capital markets. I'm an entrepreneur in residence at NYSERDA, and through that program, which is run by Tim Hoffman and his team at Columbia Technology Ventures. And finally, I guess the last major hat is I'm an operating partner at the first time startup clean tech venture fund. So even when I join people with money, it's still apparently the startup world, and that's SCAP Clean Tech Venture Fund. We're raising a fund focused on Series B technologies for mobility, energy storage, and smart water, with an emphasis on companies that are using data analytics and artificial intelligence to really accelerate their growth trajectories. So I worked in the sector for a long time, worn a lot of different hats, from investment banker, consultant, project developer, and with a lot of earlier stage companies. So big champion of the sector, as Eric knows. I've enjoyed being an adjunct to NYU, which is how I got to know him. and also volunteered in a variety of areas throughout the sector, which we can talk a little bit more about, because there's lots of ways to get engaged if you don't have a house to buy solar panels, or don't have the means if you want to see the innovation economy or the clean tech sector grow. So along with things like the Pirates.
It's fantastic. It really struck me when you mentioned early on that you've been involved in this for 15 years. A lot of people, I think, out there think clean tech has only been something that's been in the mainstream for, say, the last 5 to 10 years. I recall it being talked about a lot from an investing standpoint right up until the financial crisis. And then the brakes were put on the financial crisis. I know all the clean tech companies I invested in, 3/4 of them went to pot. I'm still living on some of the scars from that. But over the last 3 or 4 years, I feel like people have just put, steroids on the clean tech industry, and it's really taking off. And there's so many new actors and entrants into it. And some of them, as Lucas and I have talked about, are, past companies that were in the fossil fuel industry. Give us a little bit of perspective about what you've seen over the last 15 years in terms of this industry. It wasn't a linear growth, and nor was it always a logical growth. It didn't always, happen very steady state, right? We've had ups and downs with wind and solar and tax credit. Tell me a little bit about your observation about where we are versus 15 years ago, and what kind of confidence interval do you have about the future in this industry?
Thanks, Eric. I think one of the things that I've seen over, like you said, it's been a long ride, and for a lot of people, it is that financial crisis killed whatever initial investments they had. I think some of the history of the people that got involved, invested in that earlier stage, have followed the dot-com boom. And one of the challenges, which Lucas knows even better than I do, for the energy industry broadly, is that a lot of times it touches on things that are regulated for good reasons. Safety, first and foremost. And it's a lot different to innovate and have a beta version of a product of your app not work compared to the beta version of your power plant not work, or your transmission line, or the software that goes into that. So I think there was different capital efficiency and scaling and growth expectations dumped on that from the beginning, which was not necessarily the case on other industries. And I think that stigma has followed the sector for a long time since, regardless of, if you look at lots of prior segments, and I think you've referenced this over the last season, of ESG has been one of the growth engines, especially over the last decade, of jobs, of the economy relative to its peers. It's something Jigar Shah talks about, relentlessly of generate capital. And the truth is there, but that first stigma of some early blow-ups of not being able to scale or grow as quickly or as effectively has followed things. And there is a lot of truth that it was subsidy dependent, 15 years ago. I even joke that in the 5+ years that I've been teaching at NYU, the metrics of what I use of an old financial model to show what dollars per watt was for a solar panel versus now, and how much that's even dropped just over 5 years. But really, it was at $8 a watt, and now it's below $1 a watt. And that's or roughly around $1 a watt for residential, and even lower economies of scale at the utility level. So I think, one, economies have scale, have finally started to kick in, and a lot of that's due to the stimulus program after the financial crisis. In many ways, it was kind of a hidden or backdoor green mini New Deal, if you will, to get the industry going. And some of those fits and starts on a public level. Wind had a much different development timeline, I think, from both the nature of it. It's a lot more capital intensive because it's larger wind farms in general, even onshore versus offshore. And the tax credit was much more year to year, how it bounced around. There was a little more certainty on some of the subsidies for solar. So that gave at least more of a relatively smooth glide path. But the biggest thing that's been the two big things that make a difference for clean technologies in general, I think, that they've finally been able to show that they can compete straight up, is that my input costs are zero. I don't have to pay for transmission of wind or pay for transmission of the sun. Obviously, as you start to get into, and if it's distributed generation, you're not paying for that. You start to get into transmission of electrons, obviously that's an issue, but not as many issues perhaps as transmitting gas or oil or things like that. And it's really, we've seen this with solar, we're seeing this in wind, and you see it in battery storage, that they follow Moore's law as well, roughly, of the cost dropping roughly every 18 months, because these are technology innovations. They're not dependent on, how you can more better extract something. And obviously some of the input costs, which HG Giselle talked about last week, those might be a factor, but that's a one-time thing versus the continuous delivery of power. Not many places are going to be as cheap to just stick a straw in the ground as it is in Saudi Arabia or parts of the Middle East and have oil start coming. So I think that challenge, it's a technology development challenge that doesn't have other externalities working against it. And despite the challenges of the financial crisis, there was the ability to at least invest in some of those technologies and let them go. And I think we'll talk about some of this in the articles we're discussing, but the capital is going there, the math is there for this, and it has been on a long time. If you look at new generation, and I know you guys have talked about it, it's been renewable somewhere from 70 to 90 to 100% in the US and globally, well, with some of the US especially and the Western world. It's been renewable because it doesn't make sense to build a 35-year or 50-year life asset that's going to be obsolete just on a cost basis alone, without factoring in air pollution or other costs as to get into any of the policy side of carbon tax or trading or credits. The numbers just haven't penciled out for a while. And that's really been the big trend, that there was enough room, even if it was fits and starts, to really let some of the economics and to give enough certainty to let those technologies scale. And I think we'll talk about that a little bit more in some of the articles that we've highlighted, I think. So I think I'll stop there.
Fantastic. Lucas, what do you think?
Yeah, I've known Rob for quite a long time now. We've both been active in the clean tech space in New York City for, I don't know, probably a decade now, at least, as far as I can remember. And he's great. He's great to work with. We teach together for the diploma program at NYU, which, obviously I recommend. It's a Clean Start certificate now. It keeps changing name, but so you can go check that out. If you internet search for NYU Clean Start program, you can find it. Obviously, I think it's a great experience. You get great instructors like the two of us here, and I think, if you're a veteran, I believe it's free. The tuition is covered by the state. So there you go.
And Lucas, on that front, as to Eric's point too of the expansion of the sector, I did get tapped to adapt my class for a general just financial certificate program. It was something that I heard a lot as the clean tech guy in our energy finance diploma program. So the market is moving that way, even from what students want to learn in the sectors where they want to see some more focus. So even some of the NYU courses are expanding to encompass more of that. But highly recommend the Clean Start program, where Lucas is definitely the go-to guy at the moment.
Yeah, and just to potential students out there in the programs, I just want to say, none of you have a candle, will hold a candle to the fall of 2015 class. So, the bar is very high.
I'm sorry, Eric. I couldn't hear you over the world's smallest violin that was playing for you.
I'm sure it was a Stradivarius. Well, Rob, listen. I've been very appreciative. I can't tell you enough about how you altered my life course into a direction that I wanted to go to, and I needed that guidance to get there. And jokes aside, it was a very intense one semester program at the time. Definitely lamented some beautiful fall Saturdays being locked in the basement of NYU. But that being said, I even referenced some of the work that I did in that program still, because I had such pride in it. And you guys are really the reason for it. So even the other professors that are involved in the program. And so with that, we really appreciate you being our last guest. And as we always do, the guest has first dibs at the articles of the week. We should probably insert some sort of techno drum roll in season 2, like when we get to this point. Let's maybe see if we can get Doc Severinsen or something teed up to, come on and do a little segue for us.
We could get a soundboard or something, and I can mix it in. It's doable.
Absolutely.
So I kind of cheated a little bit. as Lucas and Eric could attest, I might have gone a little overboard on my initial culling of articles, but so I am cheating a little bit with a twofer to start off. But this one, Generac, the backup generator giant, launches a souped-up home solar storage system. It was in Green Tech Media by Jeff St. John on August 10th. Really just because it followed on some of the conversations that you guys have been having in the last few weeks about home storage and really islanding. And I want to just highlight two things. One, I think Generac, to your points earlier, of an incumbent that's looking at the landscape and looking at how they want to not get left behind and take advantage of that. And where they're showing that their difference is to say, we can help you run these other home systems that a Tesla Powerwall or some of the other, or I think LG, their systems won't be able to really give you a true independent solution so that you can stand up on your own. And just to highlight, and I think you guys have brought up, but just to make sure people understand why, if you've got solar panels on your roof, that doesn't automatically turn on your own power, in that, unlike, say, having a generator or something tied in, your solar panels are tied directly to the grid, so you need some additional safety mechanisms for that. And if you don't have your own battery on site, it's not going to work that way. It's a grid safety mechanism. Back to kind of what I mentioned earlier in my intro about the uniqueness of the sector, that they've got to worry about the people working on the wires as they're responding to disasters. But I thought this was kind of a nice wrap up of why Generac is there. It's timely, it's what's needed, and they're trying to offer a more robust solution than the other ones that are in the market. Eric, Lucas?
Yeah, I'll just start and just say, no, thanks for bringing this up again, because it's a nice tie-up. And we were joking before we started airing that we think that most of the people on the East Coast finally have power. But it was a crazy situation. Millions of people in the tri-state area didn't have power for 3 days, 4 days, 5 days, and finally, after a week and 3 days, some people finally had their power restored. So having backup is not just green; it's resilient. We've talked about it. I was actually laughing while Rob was speaking. One of the sidebar articles in Green Tech Media was also talking about Australia's going crazy over rooftop. I mean, Australia is a prototypical place where tons of sun, and also they had a lot of grid issues this year because of the wildfires that took place. So, this is becoming a global phenomenon. We know that not everybody can afford backup and resiliency systems. Prices will come down as battery costs come down. So we ask people to keep an eye on it for their own personal family safety reasons. But again, a Generac to go from gas-fired generation to being all in on battery says a lot to me.
Yeah, this is a great add-on article. So thanks, Rob, for bringing this. There's a lot more detail in here about the circuit level issues. So if you have a backup generator, you know that it only has so many plugs. You can only plug so many things into it. So their solution kind of handles this for you, which is really nice. I'm also noticing that their power output is significantly higher than Tesla's Powerwall or Sunrun's Brightbox. So that means you can power more things with your battery backup than you could with a Tesla or a Sunrun, even if it was islandable. So this is great. There's a lot more detail, and it makes it look even better to me. So,
yep, nice article, Rob.
Thanks. So the second thing to move to a quick CNBC article by Arjun Karpal, Chinese Tesla rival XPeng Motors files for the New York IPO, and that's from last week. And they're essentially the Chinese equivalent or competitor to Tesla. They've got 2 cars on the market. They have also not made any money. But I really just wanted to bring it up as just as an indication, kind of what I said, where the money is going, where the market's going. And I had referenced, aside from some of the highlights here for the Chinese EV company, its main investors right there that you can see on the screen and the key points. But at the end in the article that I thought was most interesting was, despite all the issues ongoing between China and the US right now, geopolitical, national security, who's funding or financing innovation, it's getting backed by Credit Suisse, JP Morgan, and Bank of America. And so back to my point of where money is going and where the biggest money, the people with the largest balance sheets are working and driving business, it's clean tech. And I think, one of the frustrations for people working in the sector over the last 4 years is to argue about things that we shouldn't even be arguing about when, kind of like I said, it's about clean technology, it's about investing. The economics make sense no matter what before you talk about some of all the other benefits. And this isn't to disparage any of the industries that helped build America over the 20th century, but do we want to be investing in what built the 20th century, what builds the 21st century? It looks like, Wall Street knows where that money should be going from an investment standpoint. So that's kind of what I wanted to throw out for the group there.
Lucas, you want to take it first?
Yeah, I mean, this is great. I'd love to see any kind of investment in, clean technology. I don't know if you've been looking at the Tesla share price the last couple of days. It continues to go crazy to the upside. So these make for good investments. Agree with Rob that this is the future. You want to invest in the future. You don't want to invest in the past. I mean, you probably don't want to invest in Kodak, for instance. Although that's a whole nother story. Or GE, right? You want to be invested in what the future is. So good to see this. Glad to see investment coming in. We welcome more investments. So good to see it. Yeah.
Yeah. While you were talking, I was looking at Kodak. I actually think Kodak is starting to kind of reinvent itself finally. So we may have to talk about that in season 2 a little bit. I think this was a very nice story. I liked Rob's perspective on U.S. banks being underwriters of a Chinese IPO. The interesting thing that isn't really talked about here is that the Chinese government has actually taken their foot off the gas on incentives for the EV industry, for people purchasing. And you would think that this is exactly the wrong time to be doing that when the rest of the world, particularly the rest of Asia, the rest of Europe, is doing everything in its power to have the coronavirus economic recovery be based upon green infrastructure built. So I hope that this is successful. It's interesting. One of my greatest times of my life is living and working in China in the mid 2000s. And, we saw a lot of people riding bikes, carrying like computer printers off the back, and it was very old world. And I'm going to talk a little bit about this, about one of my stories, but emerging market countries tend to emerge very fast these days because they can leapfrog existing Western developed countries. And to Rob's point, instead of focusing on protecting the past, people are just going head on about investing into the future. So, China has an air pollution problem. We all know it. Electric is a part of the solution, as will be the inputs into the power grid for these electric vehicles.
Yeah, and their car looks really nice too. That's cool.
Yeah, what's that phrase? Imitation is the most sincere form of flattery. Chinese car makers, have that hanging on their R&D lab walls. I will leave it at that. But it is a nice looking car. All right, Rob, next up.
So my second of my articles, which is really the third, is how to create 25 million jobs by decarbonizing the economy. And it's by Adele Peters at Fast Company. There's also my next article is by Dave Roberts at Vox. He does probably a deeper dive on this. But why I wanted to highlight the Fast Company job or article was that it focuses in its headline on jobs. And here's how decarbonizing the economy is really just going to have a massive impact on the economy from a net positive. And one of, I guess, the arguments in the past, or even, and this came up a little bit, I think this comes up in some of the articles, not to bury the lead on what Lucas and Eric might talk about, that an EV supports less jobs than an internal combustion engine. A solar panel doesn't support jobs the way that a power plant does. And so I thought it's a really interesting perspective in that it's highlighting a new study, a report done called Mobilizing for a Zero Carbon America. And everything in there is to get to a zero emissions country in a full bore, like World War II true mobilization approach with the technology that's out there right now and scalable right now. And if new innovations come on the market that become cost effective, then they'll incorporate those in. But all of their modeling and everything basically incorporates what's out there now. Just to give Eric some flashbacks to my class at NYU, I had a running debate, I guess this was back in 2015, about Jigger Shaw and Bill Gates going at it over who should funding innovation or funding just deploying what's scalable and in the market right now. And I think this is a really interesting look at, we can hit these targets that we know are very difficult, and it's going to create jobs, and it's going to be a net economic positive in addition to all the positive environmental impacts. So Dave Roberts has a different take on it, but I thought the jobs angle was really interesting as a lead for the title.
Yeah, I like this article a lot. It was very thought-provoking, and you hit a good point. I have a very good friend of mine from my China days who is involved in wind power development in China, and he told me at lunch last year while he was visiting the States, you know, the Chinese government would be all in, 100% in about renewable generation. But the reality is a coal plant employs 200 to 300 people. A wind farm, once you build it, employs 5 people, if that. So when you have a country like China that's adding 20, 30 million people a year to the workforce, then you can't have significant job losses and to sustain economy. So there has to be a strategy about job creation that's incentivized and also laid out in front of companies and people and investors. And that will take the fear and the edge off those who are still suspect about investing in green energy. So, and to your point about Jigger Shaw versus Bill Gates, I believe the answer is C, all the above. I think you need to scale up, the current and work to advance it and modernize it while not using that as an impediment to innovation. So I think you can have both, and I think you need to focus on both because investing 101 is all about diversification. And I think you have to approach an economy and you have to approach a sector like clean tech in the same way.
Thanks, Eric.
Lucas, anything?
Yeah, no, I agree with this article. I think there will be jobs created. I think, maybe they move from operational to construction roles. We'll, these things still have a limited lifetime and they'll have to be rebuilt or reconstructed or recycled. We talked about the end of life issues already with solar panels. So there's a whole industry that could be created to employ people. So there's plenty of opportunities. I don't think anybody ever said, I don't think anybody really hated on innovation because it destroys jobs. I think people understand that innovation destroys old jobs and creates new jobs. That's the whole point of innovation and technological change. So, I mean, look at everything they said. If we have computers, we won't have any workers. Well, we have more coders now than people building things, right? With their hands. So, yeah, I think it's just a step forward, and there'll be winners and losers, and people that can change and adapt will always win. So,
all right, I think it's time for the Fusion Smackdown because I'm going to disagree with you there, Lucas. I think there's a lot of people out there, especially in those who own assets in older industries, that'll do everything to protect them, and they will make innovation the arch enemy, and they will state so, and they will create ways like charging $18 for through a public utility commission for consumers to buy 3 LED light bulbs, and then, touting how great and green they are, but it's just a big moneymaker. And people said, these light bulbs are ridiculously expensive. Well, I'm going to stay with my incandescents. And that's a real case story from 15 years ago or 10 years ago. So there are people that, will fight back against protecting. And that's the problem with a mature economy like ours. And that's why we get leapfrogged by the innovative countries.
Oh yeah, I agree. And I'm going to point out some assets that are going to get eliminated in my article.
He's on the ropes. He's on the floor. 1 count, 2 count, but he's pushing back up.
They're welcome to send me hate mail in the comments or what have you. So that's fine.
These are great articles, Rob. I really enjoyed it. I think you have one more still, right?
I do. And again, just want to emphasize, the challenge of, I think Eric and Lucas said too much. And one of the things is to keep it positive. And what I really like about that article is it says we can get to full electrification by 2035, which is a key part of meeting all the Paris Accord targets and even lower at 1.5 C. So, I think it's a positive story to me, and I like the framing on jobs because, that's one of the areas that often comes down. And just one thing, because it reminded me that I want to throw back, because I sent a comment to Lucas on the islanding of utilities and how they adapt as an entrenched organization. You were talking about why don't any utilities sell individual distributed generation, solar, whatever. And I'd mentioned Green Mountain Power up in Vermont has been doing that for a number of years, again, because they have a lot of rural customers and they're trying to service that. So the economics could make sense depending on where you were, but more and more that's going to come into play. So as much as, like I said, I want to do well and do good, I know the economics is how a lot of things get framed in the conversation. And I'm also, working for a venture capital fund, and we care about making our LPs money. So, showing where the returns are going to be is important. But you're going to have a lot of positive externalities and side effects, which is really the goal.
Right. Well said.
Yeah, Eric, you weren't disagreeing with me. You were agreeing with me. I said there's going to be winners and losers. You just pointed out that the losers don't like it. That's all. I wouldn't like it either.
I don't know what Lucas is doing to me here. I think he's trying to distract me while he's come in with some sort of Hungarian neck roll or something like that to pin me on the ground. So I don't know. Rob, did we cover all your articles?
No, I have the last article, which just plays on this a little bit. We don't need to dive into too much, but I do want to highlight it because I didn't find any other sources, and I think it's kind of it's by David Roberts at Vox on August 12th that air pollution is much worse than we thought, and I think actually the Energy Gang talked about this or the electrification in their podcast, but back to my comment of economics being dominant, it's also environmentalism. So it's an article, if you just, it was in the link I sent you, Eric. I didn't know if it made it through, but Dave Roberts at Vox, and basically a more recent study, and this article came out on August 12th, and it was basically highlighting even the costs of air pollution, which we've been able to get more and more granular detail over the years as they've got more data sets for research and things like that. It's been basically proven that the economic, that's the article, the economic benefits alone of just mitigating, health impacts and damage from air pollution are more than twice as valuable from an economic standpoint to the clean energy transition. So just kind of on that thing, it's not only, you don't even have to frame it as fighting climate change, it's do you want breathable air? And since we're in the, hopefully, end of COVID summer, at least our lull, as you mentioned, you're wrapping up the season, I thought it was appropriate. Everybody was so shocked how you see stories from India, from Beijing, or even from here in New York City or other parts of the world of how quickly air quality improved and everything else as the world kind of went into hibernation and lockdown. And, there's tangible costs to that we really don't properly account for, even with the current regulations that are in place. And if we were really accounting for just that damage, not even climate change, the economics of the clean energy really speak for themselves.
Yeah, no, this is a great story. I mean, I grew up in a steel town where the pollution was horrible. I lived in China where I traveled to cities where I started coughing as soon as I got off the airplane because you can taste sulfur in the air from all the diesel fuel exhaust. So I'm a big proponent of cleaning up the air. I think personally one of the catalysts in this should be health insurance companies, because they're the ones that are bearing the ultimate price for this, because they're the ones shelling out the bucks, because so many people, and especially in denser urban areas throughout the United States and the world, are suffering the most. So this has to be something that is addressed as we restart the economy. And hopefully we restart the economy with a presidential administration that understands the need for having clean air and its impact on society and economy.
Yeah, and those areas tend to also be socially disadvantaged, economically disadvantaged areas. So this has a social justice aspect to it also. It's a big issue in New York City. They demand a certain amount of production be in the city, and that exhaust then is in the city where large amounts of people live. So yeah, this is a fantastic article. They do say that that this study shows that the air quality benefits are greater than they were estimating before. So yeah, this is amazing. It's great to see that not only is climate change a big driver for the kind of greening and cleaning of our energy infrastructure, but air quality itself is enough of a reason, and the two together are more than enough to provide impetus to make the change.
Yeah, agreed.
Yeah, look at
Agreed.
that.
All right, well done. Great articles, great perspective. So I really appreciate that, Rob. Lucas, who's going next?
You're up.
All right, I'm up. So I have 4 articles. 2 of them are somewhat tied. Again, with this being the wrap up of our first season, which I've really appreciated being involved with, I want to do a couple articles I thought were a little bit more big picture, and also reference some of the articles that we've talked about or the trends over the last 10 episodes, 11 episodes. This is the August 14th, 2020 posting from Forbes. ESG and SDG alpha backed by the blockchain. I don't think I said that very well. And it's by Vipin Bharatan, who's a contributor. And what I liked about this story, we've talked about ESG, environmental, social, and governance over the last couple episodes. We try to talk about as much as possible because pre-COVID, it was all the rage being discussed coming out of the World Economic Forum, et cetera. We've talked about the fact that there are no real solid, sustainable benchmarks about how to measure ESG. And I absolutely think that this is a must-read article for people who are potentially investing in ESG or are going to be involved in ESG investment. And the reason I like this article is, first off, he uses the idea of integrating blockchain out there to really kind of do a deep dive into the supply chain of the whole kit and caboodle for companies and their partners to really understand if they're truly being ESG or not. It's one thing for them to say they are an ESG company. But then there's an example here, I think, of a fashion company who really scored very high in ESG and sustainable development goal ratings. And then I found out one of their major suppliers was notorious for underpaying their labor. And so all of a sudden their stock dropped and they were almost booted out of the ESG community. So that's a risk that any ESG steward at that particular company should have identified, and they should have been either more transparent about, or they should have went to address it. This gentleman in the article, the author of the article, talks about the idea of using the 17 Sustainable Development Goals practiced or implemented by the UN as kind of the checklist benchmarks. And it's just because then it gives you a little bit more of a detailed checklist in order for companies to meet requirements, as opposed to like the 3 or 4 standards right now. Great article. I liked it a lot. People really need to start understanding and having clear, transparent benchmarks. I don't think at this time you're going to have consistency among understanding and rating ESG. So I think a company just needs to be aggressive and transparent. And if they're transparent, then the investment community and kind of the stakeholder community for that particular company or organization will at least be informed enough to say that this meets their criteria for ESG investing. And as time goes on, then there will be kind of a convergence. And once there's that convergence, then there's going to be true transparency across the whole spectrum of ESG. Love this article. Guys, I don't know what you think.
I'll start since we let the smartest guy close with Lucas, but no, I think it's a challenge, and I've seen this in a couple of different places and organizations that are looking to bring better reporting via the types of reports, what's in there, how far it goes back, how it's verified. Blockchain has been a running theme in a lot of it, so I think this is a good trend, and it's something that can help be, as you said, provide some real independence. And I do like that the article referenced it's no difference in the rating agencies back in the financial crisis. And when you're getting paid by the people that you're evaluating, it kind of compromises that. But also to note that as these are evolving industries, that's going to be a work in progress, but that was a challenge for the financial industry, and Moody's, et cetera. The ratings agencies have been around for what, 70, 100 years, and it has had ratings. And, you know, that was still an issue, and it still is probably an issue. So it's not something that's maybe 100% solvable, but there's more technology in place that can at least provide more verifiability and transparency than maybe on, you know, the general rating agencies.
Yeah, and I love the kind of distributed trust aspect of the blockchain that they want to take advantage of here. That idea that, you know, the blockchain depends on distributed resources to contribute and verify the blockchain and build trust, which is what, you know, the trust that's lacking, which is what Rob was just talking about. And generally, I just love to see more definitions and more strict and clear guidelines on what ESG is and how to measure it. So I find these 17 sustainable development goals, or the SDGs, to be fantastic. It really spells out, like, here's what we mean by ESG. These are things that any company can do. You know, I love the one that's like partnerships for the goals. Pretty much any business can join the 1% for the planet, or 1% for the Earth group. So there are some simple, easy things that we can do to be more ESG focused or SDG focused, and these are them. So it's great.
Yep. Good story. All right, why don't we go to the Power Mag story, the 6 investing. I want to do that one next. I thought that was a really good one.
This one?
No, the 6 investing, the red P.
Where's that
It's
one?
in between my 2 articles. There it is.
Did I get it screwed up? My bad.
Yeah, no worries. This is another, just again, another great wrap-up type of article to end season 1 for us. This is out of powermag.com, August 13th of 2020 by Sonal Patel. And the article is entitled 6 Investing Trends Reshaping Power and Utility Sector Despite COVID. And, you know, this has been a very tough year to be an optimist. But when you read this article, the year started strong, and I think laid the foundation for continued growth in, you know, mergers and acquisitions in general, but also in global clean tech investment. So she's referencing Ernst & Young's August 6th released report, Power and Utility Transaction Trends, and for the first half of 2020. And the power and utility sector saw global deal value soar to $58 billion over the first half of this year, 24% increase compared to the same time in 2019. Now, much of it, again, was Asia Pacific, Europe, Africa, and Middle East, not so much in the United States. But venture capital funding and technology was also $2.8 billion. But it was invested in electric transport, storage, digital platforms. And of course, since then, the pandemic has just caused a roller coaster ride in the sector. But I think what you're seeing is, of that $59 billion, I believe 60% of it was related to renewable energy investment. So we're continuing seeing this trend where renewable energy is outpacing fossil fuels for probably 3 years now, I think, with some relative consistency. And also the technology side of venture capital investment is very relevant, because we've talked a lot, even kind of as a sub-context over the last couple of minutes, about the fact that big institutional companies like utilities, you know, can enhance what is in the existing infrastructure for, you know, for example, the grid, by investing in technology platforms that can enhance what you already have and make things a little bit smarter, all the while you're bringing on new clean power generation. So I really like this. If you can scroll down a little bit, there were 6 trends that I think were very much worth talking about. You know, as we just talked about, renewables maintain investor trust. So I think this was great because it was a great foundation prior to COVID. I think after COVID, as part of the global investment community's resurgence from government stimulus, there's going to be more investing in renewables. Integrated utilities are divesting the focus on core assets. They actually reference a couple of things that we've talked about over the last 10 episodes, but you're seeing utilities investing in or divesting in some of their old obsolete power generation solutions, or even their transmission, like midstream gas, for example, with Dominion Energy, or getting out of the Atlantic Coast Pipeline project, and they're focusing on clean power generation. And I think that's very important. Number 3, I'll just mention by title, activist investors are pressuring utilities to consider sustainability. So I think the activist community has been stepping up. Number 4 is one that's near and dear to my heart. Investment in energy storage is about to increase. some work that I've done over the last couple of years has really said 2025 is the tipping point, the point of no return, where the size and scale of energy storage is going to be so strong, and the pricing is going to be so strong that it really is going to be the solution to peak demand pricing, taking peakers offline and using battery. So we're just heading in that right direction. And then the last two really quick: investments in infrastructure to enable transportation electrification are surging. We've talked about that ad nauseum all season. We're just seeing electric vehicles really being, understood and adopted by so many in the community, and that's fantastic. And then the last thing is just kind of like nuclear efficiency, manufacturing, digitalization are some of the technologies that are garnering investment interest. Again, some of these are bolt-on solutions to existing platforms to make them either a little bit more greener or a little bit more efficient. And we'll certainly take those because it's kind of an all-in battle to stay underneath 2 degrees centigrade global increase by 2050. Great article, definitely worth reading. It'll give you that summation, and it'll plant the seeds for the foundation for what you should be looking for not just the second half of 2020, but 2021 forward.
No, Eric, I agree. And I think to your point on the optimism or where money's been going, I've mentioned, from a consulting standpoint, it's If Capital. We work with companies a variety of stages, but some really early up through growth stage, looking for either project finance or some equity capital at various stages of their growth. And mentioned I'm an operating partner at SCAP. We're raising a fund that's focused on growth stage clean technology companies. Throughout my various hats that I wear, I would say the investment community hasn't really soured on anything in clean tech. Obviously, anything that's touching on consumers and certain other industries are facing a tough road post-COVID. We don't need to go into that, but I think as a whole, obviously things that might be specific consumer-facing could face some challenges, but the sector, from an investor standpoint, of investors looking at deals from a venture capital side, private equity side, seed, high net worth, they're looking at this sector as a place to grow and park their money for long-term investments. And because the fundamentals are there for the industry, along with those 6 points that are highlighted, over the next decade and beyond, in ways that certain other industries aren't. So that's another, I guess, positive take that I've seen for companies that are trying to access capital markets. It's a tougher environment to raise money. Things are slower, but there's not a vanishing of capital or nothing happening the way there was, say, in the financial crisis back in 2008, 2010.
Yep. Lucas?
Yeah, I know we've had some fits and starts in clean tech investment and clean energy investment. I know T. Boone Pickens didn't have a great time in his early investments in wind, but we learned from that. And I think, BP had the same thing. They made big investments in the late 90s, early 2000s that didn't play out. But I think that they were just too early. They weren't wrong. They were right. They were just too early. And I think I agree with Eric here, believe it or not, that now is the time, sometime in the next 5 years, where the clean energy sector will have so much momentum that, it will be kind of the incumbent of the energy sector after 2025. And now is the right time to invest.
Yeah, so season 10 may be our last season, right? Because nobody's going to be talking about it anymore because it'll be the standard.
Then it'll be about the fusion technology debate. So
we can only hope, Eric. I mean,
I just want to surpass MASH. I want to go through 11 seasons. That's all. It's a great story, and I love your inputs as well, guys. I thought it was really good. I got two quick ones, and they're both interconnected. Yeah, this one here, this is a great media piece that I don't read enough of, because every time I do read it, I love the stories. This is electrichybridvehicletechnology.com, which is actually in its 25th year. So they're really ahead of the curve. They were talking about hybrids before. Most people didn't know what the word hybrid actually meant. This is from August 16th by Martin Keenan. Is regulation friend or foe for electric vehicles? I like this one a lot because, again, it's a great summation article for our season. We've been talking about, electric vehicles. We know the technology is getting there. We know that there needs to be a boost from a regulatory standpoint. And I think we're finally starting to see again, I like the word, I think my word for today is convergence. We're seeing convergence of smart regulations in both North America, Europe, Asia, that are not just creating incentives for owners to buy electric vehicles, but you're creating incentives for the migration of the technology to become part of everyday society and everyday transportation solutions. I thought the one thing that was fascinating here, they talked about how, plug-in hybrid electric vehicles, everyone, put so much incentive into them when they started coming out in mass about 10, 12 years ago. And then actually they weren't as successful in terms of gasoline consumption. People use more gasoline for plug-in electric hybrids than people had estimated. And there were two reasons why. One is in North America, the vehicle exceeded the charging infrastructure. So, if you're driving to and from work and using 20 miles, fine. But if you're going to grandma's house 400 miles away on a Saturday, most likely you were going to use the gas-powered engine the whole entire time because there was no place to charge it. Or if you're going on vacation, you're going to use your gasoline part of that engine. And one other thing I remember hearing about was, when Chevy and General Motors launched the Volt, it was right around the time of the financial crisis. So the US government purchased Chevy Volts for their government fleet, but then didn't reimburse employees for the cost of electricity. They only reimbursed them for their gasoline use. So the best deal in town was buying a used Chevy Volt that was a government car because the battery and the electric motor was barely touched. And again, it just came down to the fact that somebody in government didn't truly understand how to properly incentive or regulate that vehicle for this particular purpose within government usage, but also this kind of transcended into the industry now. Plug-in electric vehicles, hybrids, are a fantastic solution, and they should stick around because now the charging infrastructure is growing in mass, and they can be used in denser urban environments, et cetera. They're better in, say, wintry states where sometimes battery degradation is greater than, warmer climates. These are things that are important, but again, because of that lack of proper regulation and understanding, it fell short. Great article, and another one that just kind of wraps up our thinking a little bit, and we continue to go forward. And I'm going to tie that to this Clean Technia story from, it actually goes back a month now, July 11th, but EV drivers in the Czech Republic, Slovakia, Slovenia, Croatia, Hungary, and Romania getting boosts from MOL and drives. Here's another story I like because we're talking about leapfrogging like we did in China. When I lived in Czech Republic in graduate school, I remember seeing one of those old communist era Skodas, like a bright orange one, rust falling out, and somebody put a 7-inch diameter BMW hood ornament on the thing to try to deceive people that this was a modern BMW. I will never forget that car. These days, we in America are doing a little bit more of that, and in emerging market, quote unquote, countries like Central and Eastern Europe, everyone's driving very modern vehicles that are way more efficient, and electric vehicle infrastructure is probably leapfrogging that of the United States. The reason? There's just more government incentive. There's more, a better regulatory environment. They're trying to tap into the knowledge base of the EU. And even gas stations now are like MOL, which is one of the largest gas station operators in Central and Eastern Europe. They're going ahead and putting EV charging infrastructure in place. With DC fast charging, by the time you get your kielbasa, slice of live bread, and maybe a cappuccino, you're going to be able to charge 80% of your battery and probably go another 200 kilometers. Again, it's about being progressive, being focused on technology, incentivizing the private sector to move forward on it. We're seeing it in China. We're seeing it in Central and Eastern Europe. I'd like to see it in Des Moines and Indiana and the rest of the United States in following example.
I mean, Eric, I think you kind of hit exactly what we've been talking about as far as legacy systems adapting and regulation adapting to what its goals are supposed to be versus sometimes it's more heavy-handed. And at least the regulators are recognizing where things are failing and adapting to that, which is important. Lucas had talked about, I think in your last episode, about the PUC and regulators actually initiating the New York Reforming Energy Vision, and the regulators actually regulating and saying this is where we want things to go, and adapting it as necessary. And I think this is the same thing. And also a company that's saying we're not going to get left behind in this, but also that it's not just necessarily what I liked about the other regulatory article was that, and you mentioned the plug-in hybrids or hybrids versus pure EVs or whatever. The goal is really zero emissions vehicles. So, you guys have touched on it, I think, a little bit, but hydrogen is something that's come up, the hydrogen economy. Maybe it's fuel cells, maybe it's what have you, but your goal is zero emissions. And so there might be a few different ways that goes. But, the innovation needs to set, these are the standards, here are the standards, and let the market meet that innovative target. And you've seen that, solar is a perfect example.
Yeah. I love these articles. Especially love the gas station here. This gets back to my sustainability argument from before, right? If you're the CEO of a gasoline company, or if you happen to own many gasoline stations and you're worried about the sustainability of your company, this is an easy move for you, right? You can hire a contractor today to install fast chargers. You can hire this company here, like they did, Drive Software. They'll private label their software and put your logo on it, which is what Mall did, and you're ready to go. I mean, it doesn't require any effort or innovation or R&D on your part to change your business from an unsustainable model, which is pulling fuel out of the ground and burning it, to a sustainable model, which is, delivering electricity to consumers the way they want it. So, great.
Yeah, do you notice on the sidebar here, top news on Clean Technia, there's an article said, it's called Fossil Fuels Are So Screwed. Since we are, a family podcast, maybe we won't go over this article, but nonetheless, I think it's a great way for me to wrap up my 4 articles. Lucas?
All right, so I wanted to open with one that's linked to kind of the discussion we've been having about batteries, and to further back up my argument about duration, because I think I'm right. So I'm always happy to see somebody else confirming that I'm right. This one out of Green Tech Media: how New York can shut down far more fossil fuel peakers. Okay, so if people don't know, the electricity grid has to build power plants that cover the electricity needs of consumers. And that happens, those needs tend to be peaking. So there are a small number of hours every year where, large amounts of electricity are demanded. And then the rest of the year, it's lower. So we have to build some generators for those peak hours that then just sit around for the rest of the year and do nothing. So these peakers tend to be the least attractive from an asset investment standpoint. So if you think about it, we're buying these things and they're just running a couple hours of the year. So as an investment, they're not a very good investment. And the other thing is they tend to be polluters. So pretty much the only people that love these peakers are the people that invested in them. So as Eric pointed out, those would be the losers in this article. The winners are the batteries that are going to replace these, I should say electric storage that's going to replace these. And they have this great graph. So this is an MIT academic grade study that was done on fossil fuel peakers and how we can replace them. They have this great graph here, figure 3, which I'm going to discuss quite a bit. So what this graph shows is average annual starts over a 10-year period. So how many times a peaker gets started, typically between 0 and 300 times. And the longest operating time in hours. Okay, so this you can directly compare to energy storage, right? How many times do I need it? How long do I need it to run? And you can see it's colored by what technology you would need to replace that peaker. And so you see lithium ion only is down in the corner near 0. So there's a small area where these peakers are turned on very few times. So these are the highest, the peakiest of the peakers. And they only run for a short period of time. That would be the duration of running. So those are the only ones currently lithium ion would be able to replace. These ones in the blue, which are much bigger and go further away from the origin, are long duration energy storage, which is interesting because I don't understand why then it's not all of the ones on the top of the graph, but whatever. And then the orange ones are a mix of lithium ion and long duration energy storage, which would cover pretty much all the peakers in the fleet. So very interesting to see some analysis, right? It's not simply tearing out peakers, putting in lithium ion. There's a lot of nuance here. There's a lot of analysis that needs to be done. We have to make sure we have the right technology to replace these highly polluting, highly risky investments that people invested in. Yeah, so love to see this. Eric, go ahead. You can take the other side.
No, my gosh, I actually agree with you. I did have to move off a camera shot because when you were talking about how great you are for getting this right, seemed to push me out of the camera. So now that I'm back, no, I very much I like this also because I think another underlying theme of the three of us today are, really talking about bridging old technologies to new technologies, or how do we get there? We just talked about it with, plug-in hybrid vehicles, or a bridge to full-on battery electric. I look at this being very similar. We're going to have lithium-ion batteries, so we're going to have large zinc batteries, as a friend mentioned to me this week, being peaker storage type of projects. We're not there yet, so let's look at using all the technology and software out there to optimize the grid as it stands now, optimize existing generation so that as much of our peakers can be based on renewable generation, or our old fossil fuel peakers will be utilized as least as possible based upon innovation in the grid. But until then, we're still going to have to live with these existing assets. They're going to generate some cash for investors. That's all fine, as long as we're consistent in the direction of moving forward and taking them offline for high ROI generating clean energy sources like long duration battery.
What I thought was interesting was that the study obviously was commissioned by the company, but they wanted to give it as much robustness as possible. So they brought in the MIT researchers, and they really made it a 1-for-1, which on the economics of how it worked. When if you know the industry, you know that there's a lot of other ways that energy storage can make money than just firing up as a peaker replacement. So it ignores some of the other economic benefits that will make an even better financial case for an investor or for a replacement if I'm the utility or trying to address those challenges. So, I thought that was really an important angle that they said 1-for-1, we're going to be better. And yet that's ignoring all the other ways that it's going to make more sense. And the other thing that I thought was just relevant, pulling it back to my earlier article on the Fast Company, one was that this is what's there now, and it can facilitate electrification of everything by 2035. That approach in that article, one thing I didn't mention, that's basically saying going to 200% of the current electricity generation for some of the reasons that I know Lucas and Eric have talked about over this season, that it's not, oh, we need to replace what's there. It's how can we make sure that there's more than enough electricity for all these other things that we're going to electrify on top of this. And so that study reinforces this kind of small granular study just on the peaker market, and really shows that all of these cases add up and are there now from the numbers.
Yeah. Great story.
Yeah, I thought that was great. My next story I felt like I had to bring up. This one is from Bloomberg. 2 million Californians go dark and the heat is just beginning. This is from Mark Chediak and David R. Baker from 3 days ago. I think we all know that California has been having some rolling blackouts. This is the first time they've had blackouts since the Enron crisis in 2001, so that's how bad it is. They're experiencing some record heat throughout California. People are blasting their air conditioners, and sadly enough, it's hitting the grid really hard. And at this peak time around 6:30, 7 o'clock, 6 o'clock, 7 o'clock, which is the duck curve peak, which we've been talking about for a decade now, so this should not be like shocking to anyone, is turning out to be a big problem. And actually, you can see CAISO was saying that they were about 1,000 megawatts short. They were asking for demand response and reductions, and then they eventually had to just cut people off, which is going to happen in this situation. So it's actually a really good call out for people to sign up for demand response. If you have energy loads that you can disconnect at the beck and call of the utility, why not get paid? The utility will pay you to disconnect those loads at peak times if you're able to do so. and then you'll get paid instead of getting a rolling blackout, which nobody wants. That sounds like a much better deal for me. So interested to hear what you guys have to say.
Well, sorry, Rob, let me go first real quick because my comments are quick. I mean, if this doesn't validate what we've talked about in the last couple of weeks about backup generation being more of a resiliency issue in terms of why people are buying it, Generac is probably doubling their sales force in California over the next couple of days. And they should, because resiliency is a big deal. And I think consumers having the ability to have control over their electricity generation by being able to store it in off-peak hours at a certain price and then deploy it within their house when there's a rolling brownout. I was really shocked and dismayed and saddened to hear that there were rolling brownouts because as somebody involved in the finance industry, as somebody who went to a graduate school that had a lot of recruits go to Enron, I was very disappointed in this. Enron, it was a financial crisis that caused it, as we talked about prior to taping this afternoon. It was a financial crisis that caused rolling brownouts. And this is, a combination of ineptitude, hubris, consumerism, old grid, old technology. And we need to kind of just keep pushing the envelope and solving these problems. And I think, resiliency and backup is going to be a way to do that.
The two things that I'd add would be that part of the reason these loads are increasing and becoming more of a challenge, probably even beyond what they had modeled out a few years ago, is the effects of climate change are happening faster. So it puts a load at this time of year in California where how many people didn't even have air conditioners until 5 years ago or whatever. So the grid was designed with some of those things in mind. So really deploying quickly both resiliency and distributed generation or other ways to mitigate that is going to be important. And the other side, or the other thing that I just wanted to note was on a power perspective or on a regulatory perspective, we've talked about this a little bit, but how is it incentivized? The duck curve, as Lucas has talked about for a decade, I've talked about it in my class at NYU, anybody in the industry has talked about it, but yet simple incentives aren't built in to say, hey, site your solar panels in a different way and we'll pay you kind of a mini version of Lucas's demand response so it reflects at a different time of day. Or some utilities would innovate on that because they were addressing some challenges rather than fighting deployment of solar panels in general, just say, hey, it's better for us if for new solar loads to go in and we'll make sure it offsets any net costs that you might have had. And that eases the burden on their installation. That's an easy fix that just doesn't happen because my default as a solar installer integrator, putting on my hat from many, many years ago, was I need to zero out your utility bill and generate you as much power as possible net. And how do I get there? Whereas if I do that, maybe I'm not making as much power, but it still gets the same effect for the customer. That's all they care about. They don't care what direction their solar panels are pointed.
Yeah, I just wanted to point out too that spot power prices surged past $1,000 a megawatt hour in California Friday evening. I mean, it makes me wonder if we're going to see some merchant, storage investments here. Merchant meaning people who are going to take price risk and not have a deal with the utility, right? Well, I don't know, what do you think here?
I don't think so just yet. No. I think it's a great point, and maybe people are looking at it, but I think from a statistical standpoint and probability standpoint, this is still kind of a one in 20-year event.
Yeah, it's good.
But I'd be curious to know what the average spot power price in the California market is. I don't know if anyone knows.
Well,
if any of our listeners know, feel free to write us in the comment section.
Well, and if the heat is going to keep ramping and the duck curve is going to get worse, then it's only going to happen more and more, right?
Yeah, no, great point. But there is a lot of storage projects already coming online that are not merchant in California. So, that could be a solution to it. But I do think the consumer is going to take it into their own hands for right now.
Well, I think it would be a less risky investment than a polluting peaker, fossil fuel peaker, in my opinion.
Or, maybe people can live the Jim Rockford lifestyle, and instead of living in a 14,000 square foot mansion for 3 people, go live in an RV and open the windows on a beach in Malibu. And then just have an old answering machine that starts the show every week.
You know what that reference is, right?
What's that?
You know how dated the Jim Rockford reference is, right?
Well, I want all the millennials listening to go on the internet, look up Rockford, and then go binge it because it's one of the greatest television shows of all time.
The Rockford Files?
Absolutely.
Oh, jeez.
Rockford and Magnum. I have my Magnum and Rockford coffee mugs on order from Amazon right now.
I'm not old enough. I'm not even a millennial.
You guys are sad. Very sad.
Just to wrap up Lucas's article, as one of the people who we all know who's worked in the sector for a long time, Carl Liggio, he's a guest speaker in my NYU class, and what he likes to say, for any utility, your cost of a blackout, I can't even price it out. It's infinity. It's astronomical. It should never happen. That's why you have all these invest in overcapacity. So it's really just a massive utility failure, and it should have been avoidable.
Yeah, I mean, when I was at the utility, somebody asked me to estimate that, and we used a percentage of GDP. I mean, it's that huge. It's ridiculous. Yeah.
I was stuck in the subway in 2003 blackout for 2.5 hours. So, I literally crawled out through a manhole on 57th Street. So I get it.
Sorry about that, buddy. All right, so I had to close out the season with a zinger. So, okay, CNN.com provided me my zinger here from their Project Planet series. Beer unsold during Australia's coronavirus lockdown has been turned into renewable energy. Okay, so I love this article by a lady named Nectar Gan. This is from August 12th. And so it turns out they took unused beer and they converted it into biogas, which is something I hope we all kind of understand. You just use some bacteria to digest the beer, and then it produces natural gas. And so that's what they did with their extra beer. They had 150,000 liters of expired beer for every week. Oh, that's a lot of beer the Australians are drinking. But luckily they were digested and they turned into natural gas for people to burn. So this is a sustainable form of electricity because that natural gas came from plants. The plants brought it from the atmosphere. So it's a full circle. So it's fully sustainable. I would have thought it would be easier just to distill it into ethanol because ethanol's already there. It's already been digested by the yeast. So I don't really understand the thinking there, but whatever. It's good news. So, cheers to Australia for turning unused beer into clean energy.
I'll go. So before Eric can get in his final notes, but yeah, just a great story, and at least showing the brewers taking finding what they can in hard times, but also just to highlight, I think there's a lot of components to building a sustainable economy beyond just power and mobility, which we've talked about a little bit. I think early in COVID, kind of to Eric's wrap up of the season, if you will, a lot of the challenges with the industrial agricultural system were kind of highlighted through concerns at grocery level or whatever. And farm waste, ag waste, waste energy, waste of power are underutilized solutions in the United States, less so in other parts of the world. But great to see, it's sad that all that beer went to waste, don't get me wrong, but like you said, Lucas, a kind of upbeat note for things on and highlighting an underutilized source of potential energy and or sustainability in the economy.
Yeah, I'm going to take a different track and express my profound disappointment in the people of Australia. During a lockdown coronavirus environment, you actually have leftover beer. I am personally, for all my Australian friends, I'm ashamed because us alcoholics here in America have had skyrocketing alcohol beer sales. In fact, most governors are now allowing restaurants to deliver alcohol to your home. We are finding using innovation, we are using technology to consume that. You guys are, trying to salvage your reputation by talking about how green you guys are because you can't consume and create biofumes on your own by drinking Australian beer. So I'm calling you all out in Australia. I think this should lead to a diplomatic row. I'm just completely disappointed in the Australian people for this.
We'll call Crocodile Dundee so you can note your displeasure.
And this is why I'm going to stick with my Yingling beer, by the way. We're all supposed to be drinking beers on our last episode. This is one of the oldest breweries in the United States, 190 years old. Damn good beer, and we're consuming it instead of burning it.
Well, before Lucas gets to highlight his own thing, I am moving to a longboard lager once we wrap up here. So there you go. From product of Hawaii.
Yeah, that's also delicious. I happen to be drinking my own personal homebrew, so you cannot buy it. This is mine, mine alone, which is excellent, honestly. So, pirate brew, yar.
Well, that I think gets us. We're through our articles now, and we're getting to the wrap up. And I just want to do very quickly ask Rob and Lucas to each give me one or two perspectives, really quick, about not just the season and the trends we've seen, but maybe the trends we're seeing during the course of 2020 that kind of stood out for you as either Lucas and I were recording these episodes, or Rob, just from your observations in the many hats that you're wearing. But give me one or two very quick bullet points you think that we can kind of start wrapping the season up here.
Well, I think the first is, a credit to you guys of how can we highlight some positive stories in the sector and get them out there outside of speaking in our own industry lingo and acronyms and all that kind of stuff, and bring in some great talented people. I mentioned before we started taping, I was worried about using too much Dave Roberts at Vox. Joe Silver also mentioned that from the Urban Future Lab. I did enjoy noting that I knew just about all of your guests, except for your guests out from Denver, Colorado. So I guess that's just the sign of I've been around the industry here in New York City a long time. But I think that the first one, general for you guys, is that there is reason for optimism throughout the sector. And while it's tough times for a lot of people in a lot of ways, and sometimes not always it's hard to be optimistic all the time, that the industry can get where it needs to go and give people what they want. Because, I don't care how my power comes on. I just care that I have power. So let's figure out how to make it as sustainable as fast as possible. And I think, you've highlighted that those things are happening, that there's positive trends there. And I think I'd just echo with what I've seen in my own career. You brought it up throughout of more awareness and people are going there. There's been a lot of fits and starts in the industry and the sector. I've been there for 16 plus years at this point, but it's on a different path and it's more grounded, and it's reaching its growth and acceleration phase now, and it's positioned to actually accelerate really quickly. Unlike it's going to be a long time to get there. I think that's here in the U.S., that's globally, and the markets bear that out right now from what I'm seeing with early stage companies and innovation. That's why I want to highlight some of the other articles that the biggest banks and financial players in the world are betting on it too. And prior issues, I think what Lucas mentioned in his one article, people were right, but sometimes their timing was off. And I think now is the time where it's still not too late for clean tech to really make a difference in fighting some of our global energy and environmental challenges. And it's here to, it's not too late, and it can get there, which, that's sometimes hard to keep that in perspective with the daily news dump.
Yeah. Well, Lucas, what do you think?
Yeah, well said. Yeah, I agree with that too. I mean, I wanted to start Pirates of Clean Tech because I feel like, people like the three of us have interesting and powerful conversations about clean tech and clean energy and the markets. And now, people who wish they could be in on our conversations, they can be, right? They get to participate. They get to hear, what we think about energy markets and how to make change and policy and, different technologies coming up and what we think about them. So I'm really happy to see that I think we've accomplished that in season one. So I'm happy to see that. We have a small but growing following of, strong followers who want inside information. They don't just want the news, they want insight. They want to know, what does this news mean? What does it mean to me? What can I do? How is this impacting investment? How's it impacting our energy grid? How is it, impacting our climate? And are we making a difference? And are we getting anywhere? Or is this all just fluff? So I think we've helped kind of, comb through these stories, comb through the noise, get to what's critically important, point out what we need to do, and spread this information to as many people as possible. So, I really do say thank you to all the people that subscribe to our podcasts and subscribe to our YouTube, that click the like button, that watch our show. Please feel free to spread it to anybody that you think needs to hear this information or wants to participate in this discussion. I think we'd like to see it grow even bigger. I've even seen some utility executives watching the show. So yes, we know you're there. And we're glad to have you, and we'd love to engage in discussion with you. So if you want to come on the show, even let us know. We also might be looking for some sponsorship. I know Eric and I spend a lot of time and energy on the channel. So we're thinking about looking for donations or sponsorships. So if you're interested in sponsoring, please feel free to reach out. I don't know. It's been a great season. I'm really happy. I'm glad to see all the people watching and getting value. And I hope season 2 will be even better.
Yeah.
Before Eric wraps up, I just want to highlight the people who are watching or want to be on this show. I already have a list of a number of other clean tech professionals that want to be here. So I do. Final kudos to you guys for putting this together or something like this. I know everybody talks about doing something, but actually putting content out every week is hard. And content that's relevant that people want to watch. So I appreciate it. I'm thankful that I was even considered, honored to be a guest, and happy to be here. And just on the optimism front, as I said, I'm helping raise money to invest in clean tech venture capital fund for early stage clean technology companies. I can't think of something that's more optimistic than that, except for maybe the entrepreneurs themselves. And so, I think there is that reason for optimism, and really appreciate being part of your conversation with you guys. I've enjoyed the season, and I know I can't speak to sponsors, but I do know that there's a lot of people in the industry that are happy to have this kind of conversation, and kudos to you guys for being trailblazers on that front.
Yeah, no, Rob, that's great. And again, thank you for being our wrap-up guest. It was by design. Because of our just friendship and the way we have great banter, we wanted you as our last guest. Let me take it from maybe continuing on your big picture to my kind of personal observation. From a big picture standpoint, I'm very blessed that in my life I've been well-traveled. I've lived in Asia, I've lived in Europe, obviously North America. And I've been angry over the last 5 to 7 years because you see all these advancements in the European Union on green investment. You see it in Asia. And I always felt we were lagging behind in North America, especially on vehicle electrification. I think 2 of us are car guys. Rob, I think you're close to a car guy, pseudo car guy. And I get very angry about it. And what I love about Pirates is we can kind of begin the process of transferring intellectual capital and property from those other nations and discuss it here. And hopefully that's a little bit of a catalyst for people to pick up on. What's happening with economic stimulus related to green investment in Europe? What is happening with green hydrogen in Asia? I really thought hydrogen was a failed experiment in the United States, and I didn't recognize until friends brought it up over the course of the season how much investing activity there is in renewable hydrogen going on around the world. So that's one example for me. The COVID crisis has been hard in the fact that there's nothing as good as a post-work beer with good friends talking about the topics we talked about. So when Lucas brought this idea of doing a podcast, I said yes for selfish reasons, really, because I just wanted to replicate the conversations that we had at many an Irish pub from Midtown, Grand Central area, all the way down to the NYU corridor over the months and years with, where you walk out and you just feel so satisfied about being with good friends, having great conversation, and feeling a little bit more knowledgeable and a little bit better about where the world is going. So I did this for selfish reasons, but it certainly propelled my appetite to be more involved in ESG and clean tech. And, with that, I think optimism has been in short supply during this year, and to be around the people that bring it every day in their daily jobs, and then for us to have that capacity to spread it to others is very meaningful for me. And just echoing Lucas, the outpouring of support we've gotten has been mind-blowing. I was very, very nervous and anxious when Lucas and I did the pilot, and we sent it around just on, texting to some friends of ours. And it was Cassandra, our first guest, who wrote and said, "This is something you guys have to do." And it just gave us that validation. And so between you, Rob, and just the great partnership that Lucas and I have developed, I've been very proud of this. And I think a closing thought is a good friend of mine in Montana that I recently reconnected with is a young woman named Wendy. Wendy and I were in the same graduate school in Czech Republic in 1999. She's American. 15 years ago, she was part of the founding team of a Mesoamerican or Central American conservation organization called Paso Pacific, where on the Pacific side of Central America, they work to really kind of just conserve ecosystems, both living, organic, et cetera. And they celebrated their 15th anniversary. And that just reminded me of the perseverance it takes to do something good for the world. So we made it through season 1. We're going to take a couple weeks off and focus on season 2. Lucas talked about sponsorship. We're going to change our format maybe a little bit. Happy to get everyone's feedback on how we should change our format, if at all. We may have a little bit more fun on our YouTube page. I'm thinking possibly electric vehicle reviews may be happening in the next couple weeks. There's a bunch of them out there, so we want to give a practical perspective on that. We just want free days in electric vehicles by neighborhood dealerships, being 3D Sons of Guns. But we had a great time, and I just want to thank Lucas. Rob, thank you for being the fantastic clothing guest that we knew you would be. Lucas, you want to talk about where people can subscribe and link up to?
Yeah, sure. So on your favorite podcast site, you can usually click subscribe or follow. We're on about, maybe a dozen podcast sites. So it depends on which one you're on. You can listen to it on your commute. You can listen to it on the train. You get some hard-hitting analysis on the greatest clean energy news sources that anybody can show. And then, on YouTube, you can click subscribe. And if you want to be first to know when our video comes out, you click the little bell icon. You have to click the bell icon. Then it comes up on your phone. Like, that's what I do. So I know our episodes hit. And then, you can click like if you especially like the episode. That helps us out. And, put in the comments anything you want to add, or you want to debate, or if you want to criticize my views on fusion or make fun of my hair, you can also do that. We welcome the comments, and I try to respond. So Rob, I responded to your comment. So I do my best to respond.
Was there, by the way, Lucas, was there some sort of Freudian connection between fusion and your hair?
That may be in a soon to come up episode. So
I think we're going to get some University of Wisconsin scientists on episode 1. Anyways, we're definitely running a little long today, but that's okay because we've had great conversation, dialogue. But I want to say thank you to Rob on behalf of Lucas and I again for your friendship and your stewardship and being our wrap-up guest for season 1. And of course, I love doing this after I have a full beer, but have to give the disclaimer: the views and opinions expressed on a show by the individuals in a show are those of themselves and not any organizations that we may be affiliated with. But Rob, thank you again. Once again, Rob Parker, Lucas Finko, and myself, Eric Planey, and we are the Pirates of Clean Tech, setting sail at the end of season 1.
Yeah.
Arr. Arr.